Alright, welcome back. You're watching Buy Now, Sell Now. Let's introduce our guest then, Manas Jaiswal on the technicals, as well as Mr. A.K Prabhakar of IDBI Capital Market Services on the fundamentals. Good morning to both of you gentlemen. Thanks for joining in. Manas, let's go across to you first and start off. What exactly are your technical picks? It's a buy on SRF, just came out with its Q3 numbers. Amara Raja, as well as a sell on Adani Enterprises, which continues. What's the rationale?
Moving in SRF, I think for last 4-5 weeks, the stock was moving sideways, and just few days back we saw a small correction. The stock took support near to 200-day moving average. But today, today's stock has given a clear breakout above 2100, and we have seen significant higher volumes in last 2 trading sessions. So I believe that the stock has potential to test its previous swing highs. Target would be around 2275. Stop loss should be 2100. Second is a buy on Amara Raja batteries, where the trend is positive. Stock has been making higher tops and higher bottoms from the level of around 670, and today's stock has broken its 200-day moving average, and it has already broken its previous swing high also. So I believe that now this rally will continue, and Amara Raja batteries can test 815. So take a long position here, keep the stop loss below 770. And last one is the sell call on Adani Enterprises. See, entire group is looking weak on the charts, and Adani Enterprise especially, because stock is trading below 200-day moving average. Stock has already broken the support of 119 on the daily charts. So I believe that here you may see some more selling pressure. Target would be around 105, and stop loss should be 123.
All right, those are some of the top recommendations from Manas. Let's get in Mr. Prabhakar as well and talk about your top wealth creation idea. Inox Leisure recently came out with its numbers. How are you looking at the overall multiplex industry, and why is this your top bet?
Good morning. No, multiplex as an industry has started to grow. In spite of 3 movies not doing well, the footfall has increased after the tax rationalization. And going forward in the budget also, interim budget, government announced that they will reduce the entertainment tax. If that is the case, I think this entertainment industry will get a big booster. And if you take Inox per se, the growth as EBITDA growth has been 80%, and EBITDA margin also improved 510 basis point. 19.3% is the EBITDA margin now, and each segment has contributed. Food, food and beverages, ad revenues, and even box collection has improved by 29.3%. and next 15 months the slate for the movies are very high, so we feel the growth momentum is likely to continue for the next 15 months. So taking something where the growth is there, I think 30% upside looks possible in this stock.
Okay, that of course is Inox Leisure, and yes, it's reported quite a strong set of numbers in the third quarter. So Mr. Prabhakar is picking this one out. Okay, let's get to all the questions and queries then. And the very first question we're getting is from Anu Menon from Hyderabad via Invol. Now Anu says she's bought 30 shares of Jubilant Foodworks at 1,266 rupees per share. Wants to know if she must hold or for the long term or sell. Well, quite timely that we've received this question. Of course, been in the news. Firstly, of course, because of the Anti-Profiteering Authority saying that they may have profiteered to the extent of 41 crore rupees because of not passing on GST benefits. But I think the more contentious issue is with respect to the royalty payment that the Jubilant brand was asking from the companies within the Jubilant umbrella of companies. So that is something that did cause the stock price to fall yesterday. Today the stock price fall is continuing. So let's get in Mr. Prabhakar's view first. It is certainly a sigh of relief, but the whole intent bit and the whole bit that this is as well a promoter group that does have debt on its books, so there's no stopping them from taking such a move going forward. All of this does come into play when it comes to Jubilant Food.
See, this corporate governance has become a huge problem. Now everybody wants to diversify business, and they have gone into unrelated business. So that has impacted. But if they learn the lesson from what is happening to other people, I think the move will not be pushed again. That is a worry which market has. That is why the stock is correcting. But if we concentrate purely on the business side, yes, for long term the business looks very good, but in short term I feel it is very expensive stock, so some profit booking might be seen. But for a long term investor, this is one business which is growing leap and bounds, and it will continue to grow.
Okay, that's the take coming in on Jubilant. So let's understand the overall technical setup as well. And what exactly, Manas, are the important levels that you're flagging off? Our investor here has purchased it at 1266. Do you believe, like Mr. Prabhakar said, that for the long haul, there is hope and that one should keep this stock in the portfolio?
I think even for medium term, I think the outlook is positive. I understand we have seen some selling pressure in last two trading sessions. But the structure, the medium to long term structure is still very much positive, because I think just few months back we saw a correction. Stock took support exactly at 50% threshold level of its previous rally. And now it seems that stock is ready to test its previous highs, which is around 1500, 1550. So for medium term, say around 2 to 3 months time, I think definitely you can hold it, keep the stop loss below 1100. Target would be in the range of 1500 to 1550.
All right, those are some important levels to map out. I hope you got your question answered on Jubilant Food. Meantime, let's focus in then on HEG. That's a stock that we'll be flagging off next. We have MV Kamath, who is joining in on the phone line from Mumbai with his query on the stock. Welcome to the show. Go ahead. What's your question? Mr. Kamath, is my voice reaching you?
Yeah, I'm on the line.
Yes, sir. What's your question on HEG? How many shares do you hold?
It is the MV Kamath, Kaamath.
All right, sir. What's your question?
Question is, madam, I'm holding 30 shares of HEG, HEG,
Right.
at the average price of 3,500.
Okay.
Now, I want your opinion. What should I do now?
3,500, you say. The stock has definitely seen quite a bit of volatility with some of these names like Graphite and HEG coming off. 2,500 is where it's currently at. Let's understand, Mr. Prabhakar, your opinion. Now, a lot of brokerages are talking about how the higher imports from China, the removal of the anti-dumping duty, all of this is going to, affect the overall business for some of these players. I'm sure there are a lot of people who really capitalized on the move in these graphite stocks and picked up shares and have been holding on to the likes of HEG. He's holding on at a level of 3,500. What is the long-term view?
See, these companies, no, in the last 5 years, 2018 was one of the best year. No, and in the best year, seeing what has happened, everybody has jumped into the stock, and the stock has given multi-bagger return, and post that, the business, the growth is not sustainable. When people understand that, we need to get out. See, one time, many companies are cyclical, and whenever there is supply crunch, you have prices going up, you have a good sales, based on which, if it is not a consistent thing, you cannot bank on it. So my suggestion is HEG, Graphite, Philip Carbon. These are stock, one should take a holistic view. Now it will take another 3-4 years for this kind of move to come. Till then, it is a pain period. So if you ask me, it is that you take your money out and shift to Reliance. That will be a better bet, because Reliance is, re-rating is possible in Reliance, and I think that will give a better move for investor who are for long term. Short term, it is anybody guess in HEG and Graphite.
That, of course, is HEG and Graphite. Maybe that big move that we had seen perhaps has now come to a halt, and maybe only 2-3 years later, according to Mr. Prabhakar, is when we could see that sort of a move being aped for. Now maybe a Reliance Industries. Okay, Manas, you as well have a sell, unsurprisingly, given the massive crack we've seen.
Definitely, and in this crack, stock has already broken the support of 3,000 on the weekly chart, and this is a confirmation of lower bottom. So I believe that the trend is negative. Definitely, because we have seen a sharp crack from the level of around 4,000 to almost 2,000. You can see an upside, and it can recover more. It can test its 20-day moving average, which is placed near to 2,800, 2,900. But I believe that on this rally, it is better idea to exit from HEG from the long position, and you should not create long position in HEG till stock is trading below 200-day moving average, which is placed near to 3,400, 3,500.
All right, that of course is HEG for you. I think both of our experts are are saying that one should avoid the stock. Okay, next up we have Pradeep Kabra from Mumbai joining us live on the phone line. Pradeep, hi, good morning. Thanks for calling in. I understand you have questions on two stocks, but let's take the first stock, and that's Rain Industries. How many shares have you bought and at what price?
290 average.
Okay, 290 is the average price. All right. Manas, I'm going to go across to you first. It's been a very choppy move that we've seen in Rain Industries today as well. In fact, the stock is down by around 5%. And this one too was one of those stocks, that had been a great wealth creator. We have seen massive run up in the stock price, though, of course, of late it has succumbed to a lot of selling pressure. So what would you advise, Manas?
See, very clearly the trend is negative because stock has been making lower tops and lower bottoms from the level of around 220, 225. And still on the chart, stock is looking weak. The possibility is high that stock can go down further and it can test 75, 70 levels. So I think it is better idea to exit from the long position on any recovery towards 100 rupees or maybe have 105. And I think one should not create long position over here till stock is trading below 120.
All right, that's the take coming in on the fundamentals, on the technicals rather, with respect to Rain Industries. In fact, Mr. Prabhakar, then let's get in a view. What exactly is your long-term outlook on Rain Industries? Do you believe that one should stay invested?
See, here the metal cycle has reversed, and importantly, Supreme Court ban on manufacturing has impacted the stock. So, post which the stock is on the down circuit on a regular basis. So, if the government regulation or court order is spoiling the business environment, then it is very difficult to sustain. Now, we have seen it in mining, in 5-6 years back. That many miners were hit. So something like that, it is due to pollution control or something. The company has taken a hit. So it will take very long time for the company to recover. Now the stock is trading at attractive level, but for short to medium term, I don't see a recovery in this company. So if you get an opportunity to exit and you want to alternate stock, I would suggest buy HDFC Bank. These are consistent growth companies, and we will be better off being in a large cap at this point of time.
All right. That of course is Rain Industries. Pradeep, you had one more question on Prakash.
Hello.
Yes, Pradeep, what's your question on Prakash Industries?
Prakash Industries also purchase around 220 average.
Okay, all right. So straight to our experts then. Mr. Prabhakar, let's go across to you. You're as well, you're advising a sell. What's the reason?
See, I have not been actively tracking Prakash Industries, so I have not tracked it, so I cannot comment on it. But these kind of companies, now it is very difficult. And in the last 5 years growth, I see only 3% growth. So even in good times, if the company has not grown, next 1-2 years are going to be difficult times. So I would advise to shift to Petronet, where their plant has been, their expansion has been delayed, but now it is just a 6 months delay. So that will be a better bet if you are looking at 3 to 4 years down the line.
Okay, that's the take coming in with respect to Prakash Industries, better bets in the markets. Do you concur, Manas?
Definitely, because see, the trend is negative. Stock has been making lower tops and lower bottoms from the level of around 250, and still on the chart stock is looking weak. I understand stock has some support near to 74 rupees, but I think in the coming days the possibility is high that stock can even break 74 rupees and it can go down and test 65 rupees. So I think it is better idea to exit from the long position on any rally towards 90 rupees or maybe 100 rupees.
Okay, so I think both of our experts have a clear-cut sell, whether it's on your stock in investment in Prakash Industries, or for that matter even in Rain Industries. I hope we've been able to answer your questions and queries. Where is the market? Well, holding on above 11,000, 67 points higher. Remember, this is the first time since October 2018 that we have been able to once again conquer that level. The Sensex too is gaining about 208 points. It's a good going for the markets. Broader markets, however, are declining in trade today, down by about 0.4%. Where exactly, very quickly, are we seeing pressure, and where are we seeing strength in terms of sectoral movers and shakers? Well, I think undoubtedly it's infra and pharma. There are some of the top losers, but media, IT, energy, these certainly are showing a lot of strength today in trade. Manas as well as Mr. Prabhakar, thanks so much for joining in and helping our viewers out with their questions and queries. But of course, we're in the thick of the earnings season, so I'm going to, before wrapping it up on the show, hear out Neeraj Kanwar of Apollo Tyres on why margins took a hit, which is probably weighing in on the share prices of Apollo Tyres as well today.
The lag effect of the cost push on raw materials in the previous quarters impacted our margins in this quarter. Our EBITDA reported was 12% as against 13.5% in Q3 of last fiscal. The increase in our R&D spends has helped us with incremental OE contracts in our home markets of India and Europe. Our spend on R&D is the highest in the industry in India, which is close to 2.5% of our sales. On an overall level, the raw material prices were significantly higher in the third quarter as compared to the previous year due to the lag effect of the increase in the crude-based raw materials in the previous quarter. Our average raw material costs were up 13% in this quarter as compared to the same period last fiscal. Looking ahead, I am confident of closing the year on a strong note with healthy volume growths across each and every product segments.